Live from the floor, this is EIA Research. We begin with NXDR, posting record gains as the market opens.
Nextdoor finds its footing, and the market is starting to notice. Nextdoor's 7.4% surge over the past 5 trading days may be more than just a short-term bounce. A historic profitability milestone, a $405 million cash fortress, and a budding AI strategy are giving early believers something to stand on. Shares of Nextdoor Holdings, NYSE, NXDR, climbed steadily through the final week of February, closing Friday at $1.75, a gain of over 7% on the 5-day chart. The move carries more weight than the headline number suggests. The catalyst? A Q4 2025 earnings report that marked a turning point for a company that has convinced Wall Street it has a viable path to profitability. Nextdoor posted Q4 revenue of $69 million, up 7% year over year, on the back of self-serve advertising momentum. More significantly, the company closed full year 2025 with a positive Adjusted EBITDA of $0.6 million. The first time in the company's history it has achieved it over a full fiscal year. For a company the market had largely ignored, crossing the EBITDA line, even by $1, is a symbolic and structural inflection point. A balance sheet most small caps can only dream of. Perhaps more important than the income statement is what Nextdoor is sitting on: $405 million in cash, cash equivalents, and marketable securities. For a company trading at a market cap of approximately $698 million, that means nearly 60 cents of every dollar invested is backed by liquid assets. This gives management a rare luxury: the ability to invest in the platform without the pressure of dilutive fundraising. This runway is no small advantage. In a market environment where capital-light, cash-rich small caps are increasingly valued as strategic assets or acquisition targets, Nextdoor's balance sheet alone commands a floor under the stock. The AI angle. Local is the last frontier. Nextdoor's CEO, Nirav Tolia, has been vocal about the company's differentiation as what he calls a trust-based local network built on a verified address-based neighborhood graph. That architecture, real people tied to real places, is increasingly attractive in an era where AI-driven advertising needs precise, high-quality audience signals. At least one hedge fund manager has publicly described NXDR as a hidden AI opportunity, pointing to the platform's unique hyperlocal data as a moat that larger social networks cannot replicate. As programmatic advertising increasingly depends on contextual and location-based targeting, Nextdoor's verified neighbor graph could command premium CPMs that its current revenue multiples don't yet reflect. Management has signaled a willingness to sacrifice near-term EBITDA to invest in the user experience, guiding Q1 2026 EBITDA to a range of -$6 million to -$4 million. Bulls see this as the right trade-off: spend now, retain users, and monetize more effectively at scale. Why this may be the beginning, not the end. The 5-day chart tells a story of a stock re-rating in real time. Institutional investors adding to positions, including a notable increase from Renaissance Technologies and new stakes from Peak 6, suggest that sophisticated money is quietly building a case for Nextdoor that the broader market has yet to price in. The stock remains deeply discounted by several fundamental measures, with Simply Wall Street estimating it is trading at more than 58% below fair value. The analyst consensus target of $2.34 per share implies roughly 34% upside from current levels, with a high estimate of $4. But the combination of a proven cash position, an inflecting profitability story, a unique data moat, and renewed institutional interest suggests the past 5 trading days may be the opening move in a longer revaluation. Click, like, share, and subscribe. Go to nxdr.ai now.